Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, happy Thursday, everybody. We are almost through August, and that is the good news. The even better news is September is right around the corner. We have a 3-day weekend coming up. We've got GDP today, PCE tomorrow, and we're going to continue to take a look at some of the day trades that we're finding. It's starting to get really promising. We're not getting the number of day trades that I would like, but more day trades aren't necessarily better because sometimes they can actually make you feel very scattered. But I like the way in which things are starting to set up and follow through. And while that's in the small corners like metals, bonds, we're definitely going to start to see better volume and therefore better participation and therefore better follow through and fall. And this is just a really good harbinger, what we've been seeing so far this week. We're flat as a pancake on the swing trades. I love that as we go into not only the end of a month, but also a 3-day weekend. And that puts us in a really good position to be able to take advantage of any catalyst volatility. Say that 3 times really fast before you have your morning cup of green tea, which I'll be getting into a little later. All right. So yes, I am uncaffeinated. It's actually worked out pretty good, I will say. All right. So then we've got, well, let's take a look at the notes here together as far as what's come up already. Preliminary GDP, 8:30 a.m. All I want to know is what do we do at 8:30? I don't really care what the number was. I'm not comparing the previous and forecast as a trade. I'm just looking at those numbers. And then really the best distillation is, hey, what happened in the indices? What happened in bonds? What happened in individual stocks when that data came out? And you can see that same 8:30 candle right here on the S&P, the NASDAQ. I will say that the Russell is probably the weakest, although all 4 of the broader averages are above that previous session close. So there's generally bullish sentiment in all 4 broader averages. Another cool thing is that you can see that they're generally moving together. So that's going to be the best type of risk appetite. What does that mean? Traders, investors have risk. They have hunger to buy stocks. They're in the mood. And as long as that can stay steady, not only at the bell, but through that opening range at first 30 minutes, we're in good shape. So we'd like to see, I don't care if it's down or it's up, but when you have that harmony, we're going to see a whole lot better follow through. So we'll keep an eye on that. Pending home sales are up at 10 a.m. So we do have a mildly significant hot zone data release at 10 o'clock. Why is it a hot zone? Well, mortgage rates are in play, rates are in play, and obviously pending home sales are going to be a barometer for that. Tomorrow we have the big inflation number, the one that is factored into the Fed models, and that's the core PCE. However, Powell's really kind of taken inflation off the table as to the thinking behind September's very probable rate cut. So it'll be interesting to see. This will be the first significant inflation metric we get since we heard from Powell in Jackson Hole last Friday, so we can start to understand, hey, are these inflation numbers really as important to traders and investors as they have been so far all this year? So that'll be a good thing to watch tomorrow at 8:30. So NVIDIA reported. My gosh, you'd think that was the end of the world or the best thing. So the way I look at it is any big stock. Why do we call the Awesome 8 or the Mag 7? So why are they such a big deal? Because of their weighting. They're weighting not only in the sector they belong to, but also they're weighting in the broader averages. So I kind of look at him as Spider-Man, right? With great power comes great responsibility. NVIDIA didn't break the market. NVIDIA really isn't hurting the market. It just kind of did nothing. There's a few things that are in the backdrop of NVIDIA. And right now the chatter is some optimism around whether or not the Blackwell AI chips can be sold to China, because you saw those China sales for those A chips, whatever they are. When I tell you I don't get into the minutia of news, I don't care. See a headline, see a price move, that's going to give you an idea. And remember, headline chasers are not exactly a smart bunch, are they? Right? But they do move the market. And I would say that's probably the vast majority of your average retail trader. Now, if you're getting to your computer and watching a trader broadcasting live, you're not a retail trader, right? You're not an average retail trader at all. You might be self-directed, you might be independent, you might be self-funded, right? We are at our desk running our own business, but you are certainly not an average retail trader who's waiting for somebody to spoon feed them something that they think nobody else knows. It's just a sad, sad affair. All right. So anyway, NVIDIA didn't do anything really significant. It's still stuck in a range, and that's fine. If it can remain where it is, this is still going to be on our watch list for a buy. So I like when earnings don't create the spectacle that they sometimes do. This is fine with me. Let NVIDIA do what it was doing before. We know a little bit more now. There's no reason to be overly bullish up at 180.65. We know where our levels are going to be, and we'll talk about that later on. GDP came in line, by the way. GDP in terms of inflation, jobs, and growth is a distant third to the prior two. In fact, the Federal Reserve only has a dual mandate of employment and inflation. What does that mean, dual mandate? That's what they're looking at to base their decisions about whether to cut or hike rates. That's it. That's it. All right, exactly, Jay. Sheeple. And look, I don't think they want to be sheeple. I don't think it's their fault, but they have all these highfalutin people on television saying, I know better than you. That's just not true. Nobody knows what's going to happen tomorrow. Everybody has a process. Some people come on the air and they have a 5-year timeline, right? Some people come on the air and they have a 2-week timeline, but that's really important information, right? Are you managing a portfolio that you plan on holding for years? Or are you putting on a trade for the next 6 months or for the next 6 weeks? And without that kind of information, without the understanding of what that strategy expectation from a time perspective is, it's a nonsensical conversation, right? And that's unfortunately what gets, put out there, these conversations without the context of time. So, those are pretty important, I think, right? Okay. Alex says, any of us in here could be analyst. Yeah, Alex, you know how it works? Yeah. I don't want to go down the salty Raghee road, but you get a PR agent. The PR agent calls their contacts and they get you on television. That's how it works. Been there, done that. Right. So they have a car come, I've had the car come pick me up here from my office. The car takes you to the studio. There's a makeup person at the studio, says, do you want to do your own makeup or shall I? They do it. They sort out the lighting. You get your 90 seconds, 3 minutes, whatever it is. And then the car takes you back home. But that's it. Now they zoom in a lot, right? Now that you could be in your office, and it always cracks me up when they show someone on TV broadcasting from their kitchen. Not that there's anything wrong with that, but if you're really a professional at this, do you have a space that you do it? That always cracks me up. Anyway, I think they're trying to do the right thing. Did I bring the pup to the interview? Oh, no. That's not okay, right? The pup would not be great on television. She would totally upstage me. Yeah, she would. All right, so let's get to it. The bell's going to ring in about 90 seconds. We know where the indices are sitting. The Russell's a little bit weaker in terms of movement. I would say if I'm going to be bullish anywhere today, let's wait to see if the NASDAQ or the Dow take charge. That's going to dictate what the S&P is most likely to do. The Dow takes charge to the upside. That will likely take financials with it. And then we can take a look at the Russell and regional banks to see if they're following the bigger banks higher. And then as far as, I'm looking over the other screen here, as far as crude oil, bonds, silver, gold, I'm actually bullish all four. I do like the idea of a setup on all four, but let's see which could set up the best. Silver right now does have a Darvis. Gold has a Darvis. Bonds have a Darvis. Heck, even Bitcoin has a Darvis this morning. And Darvis means our automated support and resistance levels based on price patterns. Gang, really important. I do not use chart patterns. And I know I sound like a heretic every time I say it, but doing this for 30 years, everybody learns flags, head and shoulders, cup and handles, right? If we all learn that, and those are so effective, why are we all here? Because they're subjective. They don't really work that well, because the subjectivity as to what I might see as a cup and handle, or someone else sees as a head and shoulders, or someone else sees as a flag, they're incredibly subjective. Chart patterns are kind of like all of us walking outside, looking up at the clouds, and one person sees a dragon, the other one thinks it's a bunny rabbit, right? Because our brains are going to process that pattern differently. But if we have a price pattern, open, high, low, close are just a fact. At a certain time, we had an open, high, low, close. That's the difference between chart pattern and price pattern, which is why at this stage of my career, I've got no time to look for bunnies in the clouds. I'm using price patterns. And that's actually what a Darvis box is. It's based on a certain number of candles, and it's based on a price pattern. And therefore, you can program that pretty simply if you have specific criteria into something like Thinkorswim, TradingView. And now you can take what was once time consuming, maybe making mistakes in the early stages of recognizing the pattern, and automate it, make it quicker, make it more accurate, make it unemotional, right? Because a lot of times we might want to see what we want to see because we're bullish, right? A lot of times what we see on the charts is going to subconsciously be a reflection of what we would like to see. That's why multiple time frame confirmation is a rabbit hole of disaster. Because if you get in on a 5-minute chart and it's not going your way, the multiple time frame confirmation gremlin in your mind goes, hey, let's look at the 15-minute chart. And let's say you set up a trade on the 30-minute chart. It's not going well. Hey, let's look at the hourly. And then all of a sudden, you're using a monthly chart because it agrees with what you thought originally on a 15-minute chart. I've seen it. You know, it's a fairly common thing. What we want to do, it's okay to look at multiple time frames, but we need to compare them, right? This is better than that. This structure is better than that structure. This time frame suits my time horizon. This one doesn't, right? Those are all things that are super important. All right, so silver could be interesting. Right away, let me show you what a warning sign looks like, because this is going to dictate how we go forward this morning, and you can see it so clearly. Let's take a look at the NASDAQ. See that? Whammo, up it goes. All right, well, we don't want to ever say the market, although I know, myself and everyone, we tend to slip into that, but it's a terrible habit. What is the market? It's nonsense. There's no such thing as the market. There are energies, there are currencies, indices, treasuries, metals, right? Take a look at the Dow. Well, if the market is the Dow, it's bearish. If the market is the NASDAQ, bullish. So what we want to do is be specific to the index, to the sector, to the stock that we're looking at. This is a mixed message. This is a mixed market message. In other words, NASDAQ's moving higher, Dow's moving lower. Do not touch the S&P on a day like today, right? So with mixed markets, that's going to be the NASDAQ or the Dow moving in a different direction, right? So mixed markets means no ES, no S&P. SPY, SPX, leave it alone. It will likely tend to move like and with the NAS most of the time. But if the NAS is moving more clearly, let's just trade the NASDAQ, right? And then if the Dow, if we want to be bearish, let's just trade the Dow. So we have to start differentiating different moves. Now, remember earlier I said, if the Dow starts to move lower, what will likely move with it? Take a look at the Russell. Why does that happen? See that Russell moving lower just like the Dow? Why does that happen? Because their top weighted sector, the one that has most influence on the index, is in the financial space. Small banks, regional banks for the Russell, big banks for the Dow, but banks be banks. And that is why they tend to be, I don't care if it's small, I don't care if it's medium, I don't care if it's large, they tend to move sympathetically. All right. So all you're looking at is the NASDAQ moving higher and the Dow moving lower. That's a mixed market, right? You got one broader average moving in one direction, the NAS higher, and you have another broader average moving in the opposite direction. So they're just moving completely different. Look at each 5-minute candle. We've got a green candle on the NAS. It's making higher highs. And we have a red down candle on the Dow. It's making lower lows. So if you were to say, is the Dow up or down? Well, it's down below the previous session close. It's making lower lows on the morning. The NASDAQ is above the previous session close. It's making higher highs on the morning, right? So mixed means, right, even more simply stated, YM is down, right? NASDAQ is up. And it's just that simple. So the really important thing is avoid ES. Avoid ES. And then also, we've got to be really specific about sectors. We've got to be really specific about which sectors you want to focus on. So if the NASDAQ is up, that means I'm going to be looking for strength in technology, semiconductors, communications, consumer discretionary. If the Dow is down, I'm going to be looking at weakness in financials, healthcare, energy, right? Maybe industrials, maybe transports. We'll see. But I want to look for what's up in the NAS, down in the Dow. Another thing to do if we have these sort of mixed markets, Dow down, or just let's just call it moving in opposite directions, the Dow and the S&P. Another thing to do might be wait till 10. Get those opening ranges, wait till 10 o'clock and see if things align after that first push of 5 or 10 minutes into the morning. And if you want to see, okay, Rog, with this push-pull between the two, there we go. ES, right? ES is just stuck. Right. And if you all want to see what the indices are doing in relation to each other again, yes, just like Janine mentioned, if you want to toggle on over to RH screen number 3 in the Sector Secrets Mastery Room, I just put us all there. You can see the Russell, Dow, S&P, NAS lined up, and you can see exactly what I'm talking about on those charts. So yeah, anytime you want to toggle on over to one of the 4 charts that I share with you all in the room. Yeah, exactly. Janine, great point. All right, back to our main screen. And let's see what else we've got here. So let's go take a look at silver. There's nothing I have setting up on the indices quite yet. No Darvis that I like necessarily. No proximity to levels I could buy or buy puts or calls from. And then taking a look at silver, that's the Darvis I'm talking about. It's above the previous session close. So we're in the bullish sentiment side of what's happening. So here's what I don't love. And this is where the indicators make things really easy. This is my support. What I'd really like to see is this indicator down near the low or the oversold part of it. Right now, it's up near the high. And if I'm moving sideways, that's where an overbought, oversold oscillator, right? Fancy word for just in a chop, is it near the floor or the ceiling? Where is it at? So if I'm near a floor here, if I'm near support, well, I'd rather be down near the floor here as well. That's another way of looking at support. So I don't love that lack of confirmation there. I like that it's above the previous session close, but I don't really love the setup in terms of the reading. The same thing's happening with gold. Going over to GC. Sideways market, above the previous session close. The Darvis is, here we go. We have still a Darvis there? Yeah, we do, right there at 34.55, above the previous session close. I like that as well. But also notice where that level is. So less than ideal. It's not a hard no, right? So what I would say is, Rob, what could we do with something like silver? It would be long or nothing. It's just that simple. I would also go smaller size, but it would be long or nothing. And I would expect it to be a little noisy. Noisy meaning the support at that floor, the support at that level is likely to be a little soft. It's not going to bounce off it sharply. It's probably going to be a little loosey-goosey around that level. Yeah. Okay. So again, I'm probably going to avoid it. Let me go give you another example. This is bonds, right? Same thing, above the previous session close. There's a Darvis, but look at the reading of our overbought, oversold tool. This is the floor. This is the floor. I want both of them as much in sync at their respective floors as possible, right? I want them at their respective floors as much as possible. All right. So keep that in mind. It's not that it may not bounce, but it's going to be a lot more noisy around what should be a nice, firm, right, solid support level. But again, it's either buy or nothing, right? And that's kind of the binary way we need to look at each level. That level is never going to be a short, not for me. It's either buy or nothing. Yeah, that's the way we got to look at it. And so we'll continue to move through the markets like that here this morning, try to find the best setups we can as we're cruising into a long weekend, end of month, a lot of chop. Let's see what the Dow and NASDAQ might do. We might see some individual trends pop up. Looks like it might be worth here to keep an eye on some weakness in XLP and XLU. They're both in downtrends. And it also looks as if the strongest sectors belong to the NASDAQ. No surprise. So let's dive into, as we progress through the morning, we'll dive into technology, semiconductors, communication, and consumer discretionary. All right, so let's get to work. All right, question.